Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, powered by the best option scanning tools on the market today, rbtrader.com. And taking a look at a market that's on hold until tomorrow's Fed rate decision, or maybe non-decision. Certainly the Fed funds rate pointing to the Fed probably sitting on their hands about 3-1 really against the Fed doing anything tomorrow. More looking for early next year as maybe the Fed's first rate increase. Other than that, we see a market that had a very nice rally yesterday. We're in that middle of kind of that trading range that we've been talking about. 2020 to the upside is certainly big resistance, and then that kind of 1900 level on the S&P 500 to the downside, showing some decent support here. So I think we'll be range bound certainly until tomorrow's Fed decision, and I really look for somewhat of a non-event unless they actually do raise rates. Certainly the market, I think, is priced for more kicking the can down the road here. Volatility staying in there somewhat high. I think you'll see the VIX come in a little bit post announcement regardless, unless we have a really big sell-off. But I don't think we'll see the VIX heading down to that 13-14 area anytime soon, given the kind of concerns we have worldwide. Other than that, as always, staying more opportunistic, using those option scanners. We saw some big volume on BUD, the old Anheuser-Busch stock InBev, on Monday. About 13,000 of the December 115 calls traded versus virtually no open interest. So huge trade out of the blue. Today came out an announcement of a takeover where they're acquiring a smaller beverage maker. Stock is up about 6 points, up about 4%. Those calls have tripled in value. So once again, highlighting that using those option scanners to identify kind of big and unusual option activity, many times you can tag along with these guys who are in the know, and once that hits the tape, certainly that becomes no longer kind of inside information. So other than that, really waiting to see what the Fed does tomorrow, staying nimble and tactical as always, and especially in this market environment, using, I think, rallies to sell into strength, and dips if you want, selling some out of the money put spreads might not be a bad play here to position yourself to be buyers down around that 1900 level for support. So given that the VIX is still right around that low 20 area, I really like selling option spreads here, out of the money spreads on both sides. I think it's somewhat overpriced, given the fact I think we'll have trouble moving either higher or lower for the foreseeable future. So until next time, this is Tim Bigham, and as always, keep those position sizes in place and those stops going. Here's the good trading. Take care.